By Naeem Aslam from AvaTrade. Well, the euro's a one-way bet, isn't it, right now?
It's absolutely, it looks like it. And Michael, if you remember when I was here last time, we said that we maintain our view that the euro is a trade where you're just going to go and then just place all the short kind of trades on this one towards the shorter side. So it's going to go more lower. And now there are two ways to play it. Now, as you were saying, that the TLTRO's results are out today, and they were disappointing.
Yes.
And then the first leg of this one, that was disappointing as well. Now, what traders or a retail person can do on the back of this one is two things. Number one, you can come and then you can place trades on euro, and then you can think that, okay, or you can have a view that the euro will go down.
Yes.
And then secondly, what's going to happen, because the TLTRO was disappointing, ECB will come and they will be more of corporate bond purchase and plus the sovereign bonds. Now, given that what the results were, I think the headwinds for Draghi are going to be a lot more less what they were before, and he very easily be able to push that button on the QE that everyone is expecting in the market.
Why do you think the headwinds have reduced for him? Because I think, I would imagine, I don't know, you know more about it than I do, but I imagine the January meeting is going to be a very stormy one, isn't it? It
is going to be a very stormy one, but given that their target is to reach 1 trillion on the balance sheet, and they wanted to go back to what the balance sheet was in 2012. They are well off from that target. Now, Germany was saying, okay, you know, they wanted to see a vetting. Basically, Germans want to see a vetting between reform and the quantitative easing, right? So the two things are done, then they can move forward. But now, Draghi can say that, okay, look, the purchase, what we are doing at the minute is not really helping. And then we have a situation on the Greece on the other side as well, which we maintain our view that that will actually resolve, and the current government could possibly come back, and even if they don't, the EU officials or the Eurozone, they will have some sort of a legislation, bit of a softness towards the Greece, because the country has done massive reforms. They are poised to give another growth for the next year for 1.5% if they do all the reforms of what they have done in the past. So in short, what we are saying is buy the equity market if the Greece thing does resolve, and if the spillover effects do not go towards Italy and Spain. The two important things, because if Greece, you know, if Greece government is saying that, okay, we are not going to stick to these budget reforms, what's going to happen in Spain and in Italy? Both countries, we know they don't like structural reform, and Germany is very much on the other side saying that we wanted to have a structural reform. Okay. So the trade is to go short on the euro, go long on the equities. There's an ETF for that.
Okay. Naeem, thanks very much indeed.